world. I'm Kyle Ellicott, your host for another edition of VCTV here at LA Token. We are excited. It is Friday. We've already had a great conversation pre-show. Excited to bring that now to you, our live audience, talking about two of my favorite industries and subjects, fintech and blockchain. Every day on VCTV, we are talking about various technologies for you as entrepreneurs and for investors, educating you on the markets and where things are happening or not happening, building up to this show every week to talk about two of the most fundamental industries and technologies that are changing the world right now, and in some cases changing every 30 seconds. So by the time we finish the show, some of this news will already be outdated and we'll be talking about something new towards the end of it as well. Super exciting to dive in and introduce our panel, but a few big headlines and why this is so important today. Deloitte recently just launched their global blockchain survey that they do every year since 2018, so 18, 19, and 2020, that showed 39%, almost half of the companies globally have blockchain in production. That's up from 23% in 2019. A huge shift seeing the adoption of blockchain technology in the enterprise. HSBC has just finished and completed one of the most viable and commercial transactions in blockchain. China, who just launched about 2 months ago, the Blockchain Service Network, BSN, has also, with their largest commercial bank, brought one of the first cross-border payments and financial systems to the Greater Bay Area in Southeast Asia. And if you're not familiar with this, this is 11 cities that are working together that have a combined population of 70 million people and now have a blockchain-enabled financial system. PayPal and Venmo are now starting to roll out crypto purchases or digital currencies as well. We're seeing new changes in additive manufacturing, robotics, and in containers around supply chain and logistics. The point of all of this is things are happening and they're happening fast. That's why we're here. That's why all of these experts are here from around the world to tell you more about how to think, how to look, how to invest, and what's happening from their perspective in these industries. Without further ado, welcome to the show, our audience. Thank you for joining. If you like today's episode, give us a thumbs up, click the subscribe button down below. If you have comments or questions, feel free to drop them in the box on the right. We will do our best to answer them in real time. If not, we're all available on social media 24/7, give or take. And also a shout out to Elena and to the entire LA Token team for bringing us here together today and every day here at VCTV. Now, to our experts. So I can take a breath and let them introduce themselves. Let's start on the Brady Bunch style left side of mine over here. Iris, welcome to the show. If you could, a quick introduction and a little background on yourself.
Well, thank you, Kyle. This is great, and thank you for the opportunity to join this distinct banker group. Speaking of myself, I'm a banker all my career life, started as a commercial bank. I was the chief executive of commercial bank at Wells before I retired in 2009. So I tease myself that I moved from being the conservative banker to the most aggressive banker, meaning that I'm now in the venture banking since 2009. And actually in my commercial experience, before PayPal started and get very robust, was our customer. We helped build PayPal in their business model. I will give you a little color here. I remember when we started to bank PayPal, the Fed, the Federal Reserve Bank of US, used to have headaches with that because, as you know, they pay outside of the M1, M2 system. They could not track the supply. So we used to get challenged by Fed once a year. And now that is become a moot issue. So with that, I stop here because there are a lot of experience to be shared here. Thank you, Kyle.
I love how you teed that up. You brought us up the hill and you just stopped. I love it. This is going to be an exciting panel as we spoke about pre-show. Welcome as well. And Rohan, my fellow coffee drinker, sir, welcome to the show. A small little cheers to you and to everyone else. It's a little hot to be doing that each time, but a quick introduction and a little background.
Thank you, Kyle. I appreciate being invited to be on the show as well. So my name is Rohan Hall, and I'm currently the CEO of a blockchain company. It's called Vodum, VOTTUN. And so what Vodum does, we're basically the WordPress for blockchain, is our tagline, basically. We believe heavily in helping the technology to become with adoption in the industry. And so we're focused on building a platform that makes it easy to build different use cases and connect to all different kinds of blockchain interoperability. Before that, I was with Capital Group American Funds. It's a 2.3 trillion AUM fund that focuses on a variety of different investments. And in that role, I was a senior architect for the Emerging Technologies Group. And what we focused on was really blockchain, AI, neuromorphic computing, all the different technologies, and how all of that will come together within the next few years. And so taking that knowledge and prior fintech experience as well, we're building basically the next generation of blockchain technologies.
Wonderful. Welcome to the show. What you're building in is a very rising category, both in decentralized applications and blockchain, for those that don't know. And this is going to be a good topic to talk about. We're going to come back to that. Sean, my man, who's dancing away, loving life. Welcome to the show. First time guest. Happy to have you here on this edition of VCTV. A little introduction and then background about yourself. Make sure you unmute.
Awesome. Oh man, I love what you guys are doing. I've been following the content. I feel it's amazing. I'm really happy to be here. To give a little bit of background about myself, again, my name is Sean Burrows. I'm the COO of Ingressive and a part of the umbrella company that has basically built a pipeline from SS3 graduation to startup investment. That pipeline consists of Ingressive LLC, which does market operations and market entry for some of your global tech firms and investment companies. We've brought in 500 startups, Techstars, Geeks on the Plane, GitHub, Figma, and basically uncovered opportunities that exist within the sub-Saharan Africa. We also have Ingressive Capital, which is our VC. We just raised our second round, I think $10 million. We invest $200,000 to $400,000 in traditional African business sectors connected to tech. And also, I'm really also happy to announce that we're also launching Ingressive for Good, a foundation next month that focuses on micro scholarships, technical talent training, and also jobs placement. So that's a little bit of background about what we do as far as the company goes. And for me personally, sometimes it's a crazy story, but basically I'm a country boy from Mississippi. My background shifted from operations with cricket and part of the transition team for AT&T when they bought the company out. And now I'm building an economic bridge between Africa and the world. So again, glad to be here.
Wow, glad to have you. This is exciting. All right, Mark. Welcome to the show, my other fellow coffee drinker. Quick introduction and a little background about yourself.
Yeah, what would be the world without coffee? Best regards from Seattle. They have to quote out Starbucks, right? So I need to make sure we'll support that, a local economy. Mark Müller-Eberstein, close from Seattle, a recovering enterprise software person. So I worked for HP and Microsoft until about 10 years ago. And investing in early stage startups since about 2011. So I'm a member of a bunch of different investor groups, Alliance of Angels, American Capital Association, the Swan Fund. For always in the cutting edge between what technology can do for businesses over my career. So in about 2014, discovered the blockchain space, first Bitcoin, then Ethereum. Of course, what does a good investor do? Invest a little bit of money in everything that looks promising. So glad to join that space. I spent a lot of time in China over the last 20 years as well. So there's a bridge across the Pacific, Seattle, China, Asia in general. And currently a managing member of a group called Codex 3, which is probably the largest blockchain investor group of angels and super angels north of California.
Wonderful, and excited to learn more a little bit more about Codex as well today. Danny, my new friend, welcome to the show as well. A little background and a little history on yourself as well.
Cool. Hey guys, thanks for having me. Super excited to be here. I'm talking to you guys from Tel Aviv, Israel. What my background basically right now is I'm the general partner of a fund called Meron Capital, which is based in Tel Aviv. Fund 1 was a $70 million fund, which we deployed in core technology companies in Tel Aviv. So we only have out of Fund 1, 2 companies that are focused blockchain fintech. One is blockchain, it's Gedit, which is operating in the zero knowledge proof domain within blockchain. The other one is Mesh Payments, which is in the B2B cross-border payment systems. And we're now, Fund 1 was seed and Series A oriented, and now we're fundraising for Fund 2, which is going to be a 50 million fund, but focusing on pre-seed and seed opportunities. So that's basically it. Shabbat Shalom, as said before, and I'm happy to be here.
And in terms of what you invest in specifically, I think I might have missed it. So core technologies within Israel, yeah. Is there any particular sector or industries that you're looking at in general?
So yes and no. Basically, why we say core technology is because the Israel advantage is in the deep technology space. So any company that competes on their algorithmic technology rather than on their engineering technology or their execution is going to be within our domain of expertise and investments. Naturally, there are some domains that we understand better or that we have a better network in. So we're going to go towards that domain. So these are AI applications, fintech, IoT, frontier. We're one of the only investors in Israel, for example, that have quantum companies within their portfolio. So this is basically going to be it. We say we're agnostic, but in reality, we're always geared towards specific expertise.
Wonderful. Thank you. Adrian, it's been a few days since we've seen each other. We last spoke about a ton of the new patents and the importance of those that have been released here in the crypto space, blockchain as well. So happy to have you back, and maybe we'll get a chance to talk a little bit more about that. But a little intro, a little background as well.
Thank you, Kyle, and thank you again to LA Token for putting these events together. Earlier, I had the impression that we are in a mastermind call, and basically this is an immersion space, which is very good for educating and for keeping your mind focused on what's important. My name is Adrian Niculescu. I'm involved in few projects. One of them is Faster Capital, which is a Dubai-based accelerator and incubator for startups. Another is CloudCoin Consortium. I'm taking care of the communication for CloudCoin, which is a post-blockchain digital currency outside of Canada and United States, the communication. And also I'm a mentor in Virgin Startups program, and happy to be here.
Wonderful. Happy to have you. And Dan, also welcome back to the show. Happy to have you again. For those that may not know you, a little background, a little intro, and we'll go from there.
Yeah, Dan Malvin. I'm managing director at 4490 Ventures. We're kind of a classic Series A venture capital firm based in the Midwest of U.S. We generally write checks 3 to 5 million in companies at the late seed or from late seed to early B. Not focused on crypto, but definitely focused on blockchain applications, and have an investment in one of a software company that uses blockchain as the core data store to create a new data management system. So it's not a blockchain application per se, but it's a tool that uses it in a very unique way, and it's growing very rapidly. So spend a lot of time around private permissioned blockchains and understanding that more so than the public chains. Software developer by training, was a C++ programmer early on in my career, and co-founded three software companies. Spent half my time as a founder and half my time as an investor over my career. So
I laugh. That's the first language one of the first languages I learned to program in, which just split my head in half. But being a Midwest investor, are you investing just solely in the Midwest, or are you looking across the country, looking globally as well?
Across the U.S., we'd invest in Canada. It'd be hard for us to go to Europe or Israel or Asia, but definitely across the U.S. And we've looked at things in Canada, but have not made an investment in Canada yet.
It's all right. I think we got some potential co-investors or partners that can help you out if you do enter those areas on this show right here. So we've got another one across the pond. Haven't seen you in about 23 hours, Julian. Welcome to the show. Happy to have you back. If you could, an introduction for everyone in the background.
Yeah, thanks again for inviting us, letting us participate. Anyone who thinks I'm an imposter from the cleanly shaven image on the intro text, that was taken before the meltdown, when barbers and dentists were still open. So I'm a product guy, 35 years. I spent 10 years at Apple in the between jobs years, before he came back and after he was ousted. Did some interesting things with advanced technology on the launch of Newton, games console, set-top boxes, learned lots of good things. Then went to AT&T Unisource, where I conceived and built a smart card-based payment system, predicated on the vision that we'd have pre-authorized debit or digital cash on a SIM card, whether that came through your bank or the phone. Then did a couple of my own startups related to mobile identity. Then 7 years at Barclays, where my colleague and I actually submitted several patents globally for modifications of the Bitcoin protocols. They were essentially focused on two key areas. One was the representation of fiat currency as a token and a wallet address as an account, addressing the global remittance market, ideally, enabling atomic immediate transactions between currencies. And the second one was representing data. I left there 1 year ago to join a fintech startup here in London. They've got the regulatory approval to operate payment and data service. And what I'm doing is building a data layer on top of that bank connectivity, which will enable people to assert things which they have proven or earned by a reliable data source. Utilizing, as was mentioned earlier by Daniel Roditi, we utilize zero knowledge proofs and enable people to do that without revealing who they are. So it's very exciting. Glad to be joining and learning on this session.
And ZK proofs, or zero knowledge proofs, is one of those areas that's still kind of a black box to most in the blockchain space, whether we're investors or founders. And so for those listening, I'll make sure to get Julian's opinion on that to get a little bit of that further unpacked, because it gets complex very quickly. So maybe he'll be able to give us a high level answer on how to think about that as an investor when you hear these types of terms as well. Ken, welcome to the show. Welcome back. A little intro, a little background as well.
Kyle, great to see you again. Thanks for having me. Fun conversation last time. Looking forward to another good one. Hi, everybody. My name is Ken Krushka, founder and CEO of Snapcheck. We are on a mission to eliminate paper checks and help bridge business payments from the 20th century into the 21st. So looking at a pragmatic view of how businesses operate today, why they do the things that they do, how they pay the people that they do, and how we can move them off of a 2,000-year-old payment instrument and into the next generation of faster payments. My background is about 20 years in fintech world. My last company was in person-to-person remittances. We were the first mobile remittance provider in the US, the first to send $1 around the world, the first global mobile bank account, where it was fully portable to wherever you as that account holder went. So a lot of really fun things that touched the end user level, and now gets to marry in this fun and interesting infrastructure that is emerging today in the world.
Wonderful. Welcome back. And last but not least, with a new background similar to Iris. This is a first I've seen. Eli, welcome back to the show. Love the new background. Little background for you, and also an introduction.
Yeah, thank you, Kyle. Yeah, actually, I really liked the background, so I thought I'd try it. Let's see how it goes. But Kyle, thanks again for having me on the show. Thank you, LA Token. I am part of Bowster Securities, a global investment banking firm, and headquartered in California with offices in San Francisco, LA, London, New York, and Beijing. We basically work in all the industries. I'm the head of blockchain and digital assets investment banking. I've been in the investments business for about 20 years, a little bit more. For the first part of my career, I was on the buy side. I built and exited an asset management firm, and some of the investments we made are public. Proofpoint, we're early investors. It's a public company now. A10 Networks and a few other ones. On the sell side, we really focus on the entrepreneurs, helping them access the global capital and liquidity. So we work with investors in every vertical that you can imagine. But our primary goal is to help them grow the company and bring in the strategic capital partners, but also really be able to give them access to public markets. So we are one of the leading investment banking firms in our sector, lower mid-market, for NASDAQ IPOs. And we do quite a bit of those. We're very fluent. So our goal is not only just to rely on the traditional private investors, venture capital, private equity, hedge funds, but really be able to bring the lower mid-market companies to NASDAQ and give them access and liquidity via public markets. So with that, blockchain and digital assets is really the next frontier. We are very active. We are one of the first broker-dealers, SEC-regulated broker-dealers, to actually have a formal practice and also a very broad client base, not only of companies that are just focused on blockchain, but also traditional companies that are addressing the customer solutions using blockchain and digital assets, both public and private. So based in San Francisco. So just a quick intro. Thanks, Kyle.
Wonderful. And again, welcome everybody to your live audience. You've heard a quick introduction for everybody. Again, if you do have questions, feel free to drop them in the comments box. We'll do our best to answer them, but we've got plenty to talk about. So if we don't get to them, we will be available afterwards as well. So investors, panelists, friends, a lot to unpack, as I said. I kicked off the show mentioning that Deloitte had recently completed their global blockchain survey, seeing over 39% and growing companies globally have blockchain in production, which is huge. Seeing that type of momentum and adoption is a big deal, and being up so huge double-digit percentages year over year, that's even bigger for us. But let's take a step back. Would love to hear all of your opinions as you're spread around the world on what is the current state of blockchain and or fintech. A lot has changed and a lot has happened globally in the last 6 months that's accelerated some of these companies or technologies that were in this space. And now as we look ahead, that doesn't look like it's going to slow down at all. In the past 24 hours, I could give you 10 new companies, 10 new headlines, and 10 new funds that were just started in this space, which is exciting. But what is actually happening on the ground? Would love to get your perspectives on where the state of these industries are. Rohan, you happen to now be in my upper corner over here, so I'm going to start with you. You're building in the space, but you've also kind of lived the fintech life. Where are things here in general?
Actually, it's quite exciting. If you were to go back, really just even 3 or 4 years ago, no one knew what blockchain was. When I spoke to people about blockchain about 4 years ago, the eyes were kind of glazed, like, what are you talking about, right? And then about 2.5 years ago, everyone knew what Bitcoin was and cryptocurrency was, and then everyone's kind of going really, really crazy about becoming zillionaires with it. But what's really happened in the last year or so that we're seeing is that people are more educated, at least they're familiar in some way or another that blockchain doesn't mean cryptocurrency, and that blockchain can be this foundational technology to other stuff, right? And so the conversation is now more about what is this other stuff, and how do we get it, and what's the value proposition for that? And so we're kind of playing into that arena where we know that this is a really great foundational technology. It's one of the emerging foundational technology, one of the largest, including AI and other stuff. And that what we've created is a middleware platform that you can build all of this stuff on it. And so we kind of look at ourselves like in the space that is in SAP, that you have different modules you can build, but you need to have some foundational technology. And this is kind of where we play into that, and we can interact with all the different public and private blockchains, but we expose APIs to make it very easy to build different use cases. So that's where we are into that space, but we're seeing a lot of really more intelligent discussions regarding where enterprises and where like partners like Oracle and PwC and Dell, and these are major partners that we work with, that they're also pretty excited and they're trying to get caught up with all of this stuff. And they're working with technology groups like us as a part of those solutions.
Well, and you bring up a key word, interoperable. The idea that things can cross over and talk to each other. Yeah. And I think this is, earlier in the year, I did a huge prediction of what was going to happen, from my opinion, in the industry in 2020. And this was, I think, number two, my number two prediction, that this was a forced function. You either do it or you don't. And if you don't, hopefully you're specialized enough to live. If not, let's see what happens. So we're going to come back to that, just like zero knowledge proofs. We're going to come back there. But Sean, same to you. What's happening on a global scale? What are you seeing in these industries? You're also based in Africa right now, where this, we've talked about on previous episodes, is one of the biggest markets for the future of fintech. So what are you seeing, and how are you seeing this applied locally, in addition to your global perspective as well? You're on mute, buddy.
So just to give you some insight, we knew somebody would do it once. It was me. So with that being said, what I really do, a large part of what I do is I'm building the pipeline. So I'm trying to basically, on one side, expose certain communities to technology, and on the other side, filter out those top performing individuals or companies into global markets, or technically plug them into capital and resources. So what I'm seeing from the African perspective, primarily sub-Saharan Africa, is that you have this beauty and the beast type of interaction that exists when you're considering fintech and you're looking at blockchain. Beauty and the beast from the perspective of fintech in Nigeria and different places like this is kind of like, it's the prima donna, it's the belle of the ball. Anytime you wake up and you look around, if you close your eyes and throw a rock, you will hit a fintech company or a fintech startup. It's very interesting. And I think that the major issue, or the major thing that is driving fintech from the African perspective, is that even though it's undervalued compared to the capacity or compared to what it could do, that it is the thing that is drawing in a lot of international investment. So if you look at companies like InterSwitch, which was supported by Visa or MasterCard, I believe it was. If you look at some of these companies like Flutterwave, these represent kind of the companies that kind of kick the door open and kind of open up the doors for a lot of different fintechs to find out that we can actually solve a major problem, or we can actually solve that issue of how do we get money coming in and out. And since it's a major problem that's experienced by so many people here, again, you run into a lot of different solutions. And if you look at how Africa is kind of outpacing the world in certain areas, it really kind of confuses me on how it's kind of, again, the valuation of some of these companies don't make sense. One of those things being said, like Cash App, I believe Vimo are like two of the most popular instant transmission of cash applications. But that type of technology existed in Africa more than a decade ago. It's actually a result of what is needed day to day when it comes to just sending money back and forth. When you start getting into these places and when you start having conversations about the unbanked. Another interesting company to look at in that space is also Paga. So again, now when we start talking, so I can go on and on and on in that space, but that's kind of what we're seeing it now, where you're seeing new companies pop up all the time. There's PayHippo, there's Swipe, you have micro lenders, you have all these different spaces that are kind of exploding, but they're still trying to solve that problem of how do we easily transmit money outside of the border. And those companies are the ones that are raising eyebrows when it comes to investment, the ones that are trying to actively solve that problem. When we get into blockchain, it would seem that blockchain would be an amazing solution to that problem. But from my perspective, especially working with different communities, you saw a 8 to 9 month period where it was blockchain, blockchain, blockchain. We want to make something. We have this solution. Government's getting involved. All these different people are trying to find different solutions. And then after that 8 to 9 month period, everything goes dark. You don't really hear a lot about it. One of the companies we were dealing with, Cesso Global, had this amazing application where they were using blockchain to solve a major problem, which was transfer of land ownership and being able to track that. I know, Nigeria is known for scams and different places are known for scams and different things like that. But it's true and it exists everywhere. But that was going to be potentially a groundbreaking development. And then all of a sudden, Cesso goes and says that we're no longer going to use blockchain for this solution. You hear things about like the Central Bank of Nigeria saying that people should be wary and you should not trust cryptocurrencies and different things like that. That speaks directly against Nigeria in particular being one of the biggest cryptocurrency markets in the world. Well, okay, as far as a country perspective, once you start comparing different countries, of course, we're outpaced by a lot of different people. But that's kind of basically the perspective that we see. You see with FinTech, it's ever growing. There's a lot of attention being placed on it. But when you look at blockchain, it was kind of, it went the way of a Tamagotchi or a pet rock or Beanie Babies, it would seem in the short term.
Very interesting references. Aged yourself a little bit, respectfully, but I'll give it to you. Thank you very much, Sean. Mark, to you, same. What are you seeing in this space? I mean, you're also in Seattle, so there was also mention that Amazon is now using blockchain on the supply chain side to not just track supplies, but also to handle the track and trace of employees within their logistics center. So you're by one and the second biggest, Microsoft, with blockchain as a service and all of these pieces in their stack as well. So what are you seeing both locally and globally in both FinTech and blockchain as a whole?
So yeah, I think you mentioned it. We focus a lot on the enterprise applications of blockchain technology. I think based on having Amazon and Microsoft in our backyard and a lot of the innovation and platforms provided here. It's actually very interesting. So Sean, Ron, I was very impressed with listening to how much are you driving at this point already. And it's actually, it feels a little bit like back in Davos or the CFC earlier this year. So we brought a really good group together here from the LA Token team. So very impressed. Yeah, I think we see a lot of momentum in the enterprise space. E&Y drove an interesting event, I think a couple of weeks ago, announcing that 800 of their customers are already live on public blockchain-based infrastructure solutions. So they are trying to figure out how do you use public blockchains to build enterprise solutions. And that's quite a thing we have followed on for the last years. I think in London in 2018, I think Barclays Bank and Royal Bank of Scotland, they already said they're implementing the private blockchain solutions on Hyperledger just so they build the muscle for how to build those solutions, but they know the innovation is happening on the public side. We have been very close to the Ethereum group for many, many years now. So we're definitely supporting and seeing what's happening in that ecosystem. MakerDAO and the whole rest of DeFi are things we are watching closely and helping on our side. What's interesting currently as an investor is there's a lot of money on the sideline. I think the CEO of BlackRock said there's a $5 trillion worth of cash right now waiting to be invested. And the question is, where do you put it? Central banks are printing money. They're buying the junk bonds at this point in time. And where does the money go? Well, it goes to the people that already have it. And what do we do with it? It's we are looking globally for investments right now. You ask me what's going on. We have, I think we have 3 different due diligence projects across the world. They range from enterprise to crypto finance, commercial consumer products in Singapore. We are still working very closely with projects we have invested and supported early on, like the Pundi X people that are also from Singapore, launched their FX chain now. So there's a lot of projects we are monitoring. And it comes back to the old, what we've learned over the last 10 years. It's really, ideas are great, but it's about the team and the commitment of the people and how they are actually driving things forward. And we have been, with that thesis of making sure we're focusing on the people first and helping them to sustain their idea, vision, and coherent strategy over the long term has been very successful for us.
Absolutely. And we're going to come back to that as we talk a little bit later in the show of how, as investors, we look at companies, how are we diligencing companies, what matters, what doesn't as well. So thank you, Mark, for teeing that up. Danny, same question to you. What are you seeing on a global scale or even locally happening in these 2 markets?
Yeah, with pleasure. So basically, Israel has always been a market where there was a lot of technology expertise, right? Deep technology expertise. In the fintech world, it has been less sensed, right? Israel is less of a global leader in the fintech world than it was in the cyber, or that it is in the cyberspace. We do have some key winners in the fintech space. I mean, we can think about eToro in the consumer, Riskify, Fraudster in the fraud segment. We in the insurance with Next, Lemonade, then Fundbox, and all of these kind of companies. But we'll realize that most of them target the real aspect of the core technology that's present there. So what we can see now is a focus towards technology for fin, right? So like more selling to the big banks, trying to replace legacy software that they could have had, or to bring next generation type of fintech abilities to these guys. Like when it comes to GDPR, open banking, next generation insurtech for more accurate underwriting, embedded finance, and general vertically integrated software tools. So that's what we've been seeing, and I hope that we're going to see more and more coming out of it. Now, when it comes to blockchain, it's been just like everywhere else, right? So like in the very beginning, there was a big need for strong technology within the blockchain space. So there was a lot of activity here at the same time as the rest of the world, right? Because there was kind of like this gold rush. That's how there were companies like Kedit that we funded that were taking care of zero knowledge proof that it looks like we're going to get back to that later. But trying to solve or to find a use case. I think that's this missing type of use case approach has brought us to where we are today. And honestly, like I see very little activity here. So there's been quite a few funds that were put together. I think now I see less of them coming together. I think that we are still at a point where we need to go back to the basics and say, okay, like now we're going to be finding use cases, and I'm not sure that that's going to come from Israel, because as mentioned, it's less of an execution type of geography and more of a technology type of geography. So as soon as those big use cases are going to come out, Israel is going to come in order to facilitate them at scale. So that's how I see this evolving over the short, mid, and long term.
I want to touch on something real quick.
Cool.
So cybersecurity, or we'll just call it security, and insurtech. So the one great thing about fintech is it provides us new technologies around finance in its highest level. But with that comes tons of concerns around security and around insurance of said financial transactions or whatever it may be. Are you seeing a lot of activity in these areas focused around that financial layer? So you mentioned Lemonade and a few others. Are you seeing more and more activity in Israel focused around the security in finance or around insurance kind of replacing, not directly, but indirectly, like the FDIC that we have here in the States, that we're starting to see replacements in the decentralized finance space as well.
Absolutely. So I think that at the end of the day, basically, there's many layers of cybersecurity that you have to take into consideration when you're talking about how banks execute transactions, right? So like basically, there's the SWIFT network, and there's quite a lot of different channels that could be secured, and there's also the basic bank underlying infrastructure. And now, because of this new push for open banking and for more transparency and for more players within the fintech space, we're adding more third party, right? And so this third party risk is indeed bringing some new startups, and there's fraud, right? And fraud, basically, at the end of the day, it's I would say we call it cybersecurity, but at the end of the day, it's general machine learning and trying to do basically predictive analytics. Right, so looking at different transactions or different claims, right? Because you mentioned insurtech, so you would look at different claims and then do predictive analytics, looking at how that works, looking at these different transactions and say, okay, like this one is weird. So we do see quite a lot of it. We can call it cybersecurity. We can just call it vertical machine learning, but yeah, we do see quite a lot of those.
Wonderful, thank you. Yeah, and that's again, we're going to come back to that as we dive into our next subjects here in a few minutes. Adrian, same to you. I mean, we talked about this about 2 days ago around what you saw in the patent space, but on a bigger, broader scale, what are you seeing happening around fintech and blockchain as a whole?
I will bring into discussion two examples, which are not good examples, but since this is a relatively new industry, the cases and the legislation is built around what's happening. The two examples are what we are seeing today with the German fintech Wirecard, which was inflated basically. And how can you have like $1 billion to disappear?
Yeah. Almost 2 billion.
In a 2 billion.
I thought we said no politics here.
Yeah, it's okay. It's okay. I'm with Danny on this.
No, this is no politics. And Mr. Bill Gates said in 1994 that banking is necessary, banks are not. When you have a fintech company, it means that every euro, it's somewhere registered in an electronic system. It seems impossible even to disappear, let's say 1,000, if it's not made by design. This is one example. And the second one, I believe 1 year and a half ago, something like that, an exchange from New Zealand, Cryptopia, went into insolvency. And I'm looking at the reports published from the liquidator. And every few months, they charge like almost $1 million. And over 1 year and something, they didn't find any practical solution. They sold some chairs, some computers. So while fintech and blockchain being two young industries, we are start seeing these problems and how the markets, how the lawyers, and how people are reacting to that. So we need to understand that in the end of the day, the business basics are very, very important, and that blockchain is just a facilitator, a medium. And of course, fintech is the future of banking, but if a project is not successful from the business point of view, it will not work. And the investors are lured with, okay, we are putting this money and okay, we have a unicorn, but this unicorn status is based on the model of the future. If people will keep subscriptions, if the economy will go very well, and if people will not do like when MySpace was the god of social media and everybody went on Facebook. So the basics of the economics are more important than ever.
Yeah, and that's what we found in kind of the past couple of months around the decentralized finance, or that early days of what is leading into open finance, right? Where there was a need for auditing, there was a need for insurance, there was a need for these basic principles that we had just kind of moved away from because everything's going so fast. And now it's incredibly important. And Dan, I want to come to you. I mean, you're focused on more the private side of blockchain, but also a little bit of fintech enterprise. And you've split the world of, you were an engineer, so you know what these things require, what needs to be there, but you're also now an investor looking at these. So what are you seeing happening in the broader fintech blockchain space?
Well, I think it's the maturation is starting to reveal different use cases that we believe are investable. So blockchain was originally designed really to be what we call an asset ownership ledger, right? I own this asset, now you own this asset. And tremendous amount of innovation then took off from that in the different cryptocurrencies and in other things like land ownership type, other things, but it's still asset ownership back and forth. Where we're seeing probably more beyond that is in larger scale data management applications, things that need more data. So a public blockchain in effect acts like a load balancer in reverse. So if you go back to like an internet architecture or software architecture, it takes load balancers, right? Try and take something and divvy it up among servers for increased speed. These flip it around. You take everything and you duplicate it on every server. It creates, extreme integrity and security and transparency, which allow for cryptocurrency. But when you're trying to do things that require large amounts of data, it just becomes unwieldy. So one of the stats that the investment we made, kind of one of the big stats that we anchored around was, if you want to store, and this is a little bit dated, I think it's actually getting even more expensive. If you want to store 1 gig of data on Ethereum, it was, I think it was $5 million of resource cost because you're processing it on these servers everywhere, right? To store 1 gig of data on AWS, it costs 3 cents, right? So it's just a fundamentally different thing you're trying to do. So you just don't store, you only store small amounts of very high value data on a public blockchain, hence, i.e. a cryptocurrency, right? But enterprises need to store lots of data for different types of applications. And so what's happening, so Ethereum 2 is coming out, and they're making it even more expensive for data storage. And they're basically saying to the community, you need other data storage mechanisms to hang off of Ethereum 2. And so that's where we're finding investable opportunities around that.
So kind of things at the edge, if you will, that distributed storage, that distributed compute, kind of uncoupling of what is cloud storage, right? AWS and the like brought that all in-house. Now what you're seeing as opportunities, blockchain is actually spreading that out. So you've got the blockchain, call it layer 0 or layer 1, pardon me, blockchains, and then you've got layer 2, which is starting to expel that scaling aspect. So storage, compute, and the like. You're seeing activity more so there, it sounds like.
Yeah, I'd say investable activity, right?
Yep.
If this was 5 years ago, I might be looking to deploy a lot into cryptocurrencies, right? But today, because we look out, now to 5 years forward, that's where we're seeing the more nascent, investable opportunities.
Yeah, Julian, I saw you put your hand up. Rohan, I got you next. Julian, go ahead.
Yeah, I think just picking up on what Dan's saying about, what's happening, what are we seeing happening? When I first looked at the protocols, 2013, as I mentioned, I was an employee of Barclays, a global bank, 330 years old. And being a product guy, I wanted to, having got my head around the technology and what it was capable of, I wanted to make sure I fully understood what the fit was with our business. So I went to our archive center where we have artifacts from hundreds of years. And we used to issue a piece of paper called bearer instruments. I promised to pay the bearer on demand. We used to have these great big ledgers in goat hide called the signature book, where there was descriptions of little elderly ladies with missing front teeth and long gray hair. And that's what we used to do. We used to identify people and give them this bearer instrument. And when I came back to my colleagues, I said, we've been here before. This is what this technology does. It puts the individual in control of something they own or something they can prove, but with a whole host of new efficiencies. So when coming back to the question being asked, what do I see happening? I see that people are realizing some of the point that Dan makes. You know, the central premise of the Bitcoin paper by Satoshi was censorship resistant means of payment. The implication of that censorship resistance was this huge complexity and overhead of the consensus mechanism. What is happening now is that people are seeing that whereas that is perfectly valid in a world of zero trust, most of the networks they are trying to build with their suppliers and customers around the world don't need to assume zero trust. On the contrary, most of those relationships are built on trust. So we're seeing initiatives that are looking at permissioned ledgers, significantly more efficient consensus mechanisms, and utilizing this fundamental of the blockchain as database, which is this immutable ledger, a single version of the truth, but with much more efficient rules as to who can join the network and who can write to that database. I think that's summarizes the contribution I wanted to make on this topic.
And I see a lot of heads shaking. So Rohan, you have a quick point. Ken, I'm coming to you, and then Iris, yeah. I see you shaking, and Eli. So we're coming around. Don't worry, I see everybody. Go ahead, Rohan.
I'll make it very quick regarding the problem that Dan described correctly. And first of all, we'll file patents with interoperability. We've been doing this for a while now. But essentially, the problem that Dan described can be solved with interoperability, where not every blockchain is the same. And so for big volumes of transactions, you just basically put nodes in AWS, for example, and you just use a private blockchain like Hyperledger if you want to do that, or you can drop something in Oracle Cloud as well. And so in that case, Hyperledger is essentially free. You can do as much transactions as you want. You can store, the thousands of transactions much faster than you can with Ethereum. What you would do with a public ledger is basically do a storage of a hash of the transactions. So you could just do one daily transaction in a public blockchain. So you can always go back, or you can share that publicly. But you can do all the detailed transactions in a private blockchain like Hyperledger, and where you can go ahead and have the governance and the sharing of the data with all the different participants. So we use that process in our supply chain application for track and trace of data, and where we can actually make some of the data, could just be a summary of the data, available in the public blockchain for more global consumption. So that's one way to look at that, solving that particular problem. And where the cost, one transaction in Ethereum is less than $1, and then all the transaction in Hyperledger is essentially free.
Well, and not to take away from what Ken made, just note here in a second, because he is a very storied expert in the fintech space, that one thing we tend to forget, we are still in the early days of all of this, still in the very early days. The internet was not built overnight. Most of the technologies and things we've talked about in industries have not been built overnight. Blockchain is, if we go back to when the white paper for Bitcoin was launched, it was 2008, moving into the first block in 2009, literally just months apart from each other. And here we are in 2020. Whoa, 2020. The point is these are still early days where a lot of this stuff is being tested, broken, and seeing if and when it can scale. So to Dan and to your point, both very valid. And we may see the future where this does come down in costs. We may see a more distributed future where this is cheaper than it was in cloud, but we're still in those early days, which is exciting and also makes for good controversial conversation, because which way to go? And I'll leave with this before I switch over to Ken, is the value about this industry that's so exciting, and why I get excited about it too, is the term gets tossed around of Legos or building blocks. And it really is that you can kind of pick and choose pieces of this. That's why I asked Dan about distributed storage a little bit more than just the general statement, is because sometimes if you are building in these spaces, you only need pieces of this, right? You only need certain things around security. You only need that distributed or storage at the edge, which is exciting and allows for the decoupling in the right way. But I'm going to pause there because I'm taking too much away from y'all that are the experts as well. So Ken, I want to come back to you. Oh, Mark, I'm sorry. You have a point because
because I have to disagree with you a little bit. Partly, yeah, I'm in the enterprise software business for forever. I can remember when people said, "Why do I need a mobile internet and cloud computing is for consumers?" I have not seen anything happening as quickly in the enterprise space as blockchain adoption. From the Fintech Ideas Festival, that's like where the CEOs of the largest banks and finance industry get together. In 2017, they barely could speak blockchain. In 2019, they had hundreds of projects in production within their organizations already. So it is definitely a different ballgame because the enterprises see the benefit, the economical and efficiency benefit of blockchain technology within their organization.
And I will fully agree. And Daniel, I will fully agree. The reason I say we're still in the early days is we're calling out different pieces of this, right? Some of those things are still coming together and we're taking lessons as they come. But I do not disagree with you. The acceleration from 2017 to 2020, holy crap. And I will also add, before I switch over to Daniel here, in the last 6 months, I'll be generous saying the last year, we saw things happen in waves that in other industries or other times in technology would have taken months, if not years, for people to adopt or to fix. And the way that communities and the way that groups have come together, for whatever reason, I'll let you guys answer that, is unlike any other area of technology I have seen as well. So I agree with you on that. Thank you for the disagreement. Daniel, and then Ken, I promise I'm coming to you. Same with Iris and Eli. I see you both. Dan.
Yeah, so I have to agree and disagree actually with you guys. I think that basically there's a reason behind all this, and the reason is that blockchain was very like key to the media, right? Everybody was talking about it, and everybody saw this as like next generation technology. And so all of the media were focusing on it, and companies had to answer. Companies had to have some type of take on this. And so what these big enterprises did, they built in blockchain departments that were basically innovation departments, just so they could tell the press, yeah, we are working on this, and we have a blockchain department, and we have some pilots going, etc. And there were guys within those departments that were actually paid to start pilots with blockchain companies. So when you look at what a pilot would work and would look like in the blockchain space versus in the enterprise software space, the KPIs were very loosely defined, and they were led by marketing rather than by business units. And so I do agree with you that this has gone to a better place today, but we still yet have to see real deployment in production within revenue generating business lines of these big companies where blockchain has a crucial place within all of it. So yeah, I'm not sure I'm 100% aligned here.
No, you're fine. I see Ken like trying to hit the unmute button, but I want to make sure Ken gets a chance to, and along with Iris and Eli, to get their opinions in, and then I will come back to this discussion. All right. So Ken, to you.
Hey, thanks, Kyle. Yeah, so really great stuff. I want to echo what Dan was saying just a few minutes ago, and I love that analogy of the reverse load balancer. I'm going to steal it and use it as my own from now on. That is perfect because the thing that people don't realize or don't verbalize is that blockchain puts Metcalfe's law on its head, right? Metcalfe's law works against you in terms of efficiency now, right? So that directly goes into the resource utilization. Yes, we can use hashes, Merkle trees, a whole bunch of things, but now you're putting a proxy for the actual data onto the blockchain instead of the actual data. So while that's great if both parties have a view into that asset and they can both hash it and then they can look and see, yes, we both agree that that's on the tree, but how does anyone extract data, right? How do you utilize the network? And that's the problem. And that's where I think, Julian, hit on the right point, right? It's, if we take that step back, right, into banking, fintech, it's all trust. The entire ecosystem is trust. It's a product for trust, right? And if you, as business partners have said, right, we don't need an NDA because if you don't trust me to sign an, beyond an NDA, we shouldn't be doing business anyway. This entire ecosystem in the enterprise is built off of, looking each other in the eyes, trusting who they are, and working together. So I think that's where you have a lot of the most promising applications of the blockchain technology. But if we take a step back and go all the way back to Kyle's original question here, what are we seeing in the world today? And I think we are at a singularly unique time in history, right? With this global pandemic, lockdowns, global economic downturn, right? And that cannot be forgotten. Right, this is something that is core to what I am hearing every single day. Is there is a renewed interest right now on cost efficiency. Right, there is much less emphasis right now on revenue growth and new opportunities. It's all about surviving this storm, right? With production-ready deployments that can be utilized right now to cut expenses, to make operations more efficient. So while we're looking, on the investor side, maybe looking, what happens 5 years from now after we come out of the storm, the enterprises, banks, and other large corporates are looking at how do we hunker down, right? How do we save money? How do we make things more efficient? And that doesn't mean, a long-term research project, long-term pilot. It means give me something now that can solve a pain. And help my business today.
And that's, I think, goes back to Danny's point as well, is there was a ton of press. So if anything, we had the ICO wave, we had the press wave, and then there was the, oh shit, we actually need to do something here because this is costing, to Dan's point, a ton of money. So we need to figure out what we're actually doing here. And then, to your point, come to full circle where we are today, it's no longer a question. And Iris, I want to come to you to further that. Any other additional comments, or what are you seeing in the market as well here in the Bay, or just globally from your, your days on the commerce banking side?
Yeah, one thing I skip in my introduction is that I am a senior partner at Mighty Capital. Mighty Capital invests in
sneaky.
Level A and more mature companies. I think there is a company that we invested in, Icon. They are the blockchain technology provider. They're not the consultant, but however, they are helping companies to build the blockchain platform and technology. So from their business activities, we can sort of gauge how fast blockchain is accelerated in the market. Part of the discussion reminds me of when internet first got offered, we put together online banking. In those days, we had to pay people to get online. So the way I look at blockchain technology is actually the next generation of internet. If you look at how the ecosystem, everybody touched on trust, because now if you look at privacy issue, if we have trust even among just the ecosystem, the privacy issue will not be an issue. Right, so the trust is really the blockchain technology can offer, and fintech is an early adopter of the blockchain technology. But if you look at how it's evolved, my dream is to see that health care will also adopt the blockchain technology, because so critical. It's just equally critical in terms of protecting the health data, getting treatment, getting on-time treatment. And my last point is the data storage and extraction is an issue. However, with the advent of 5G, I think that will get eased up. And I actually personally predict that blockchain will take off beyond this 2020.
So let's take a moment real quick. And Julian, I promise I will come back to you. Iris, I want to touch on that for just a second. So you bring up 5G. We've talked about 5G or the future of connectivity almost all week in different technologies. Why is 5G important to this industry more than ever going forward?
Well, if you look at the 5G benefits, right, the cost will go down, the speed will go up, the storage will be better, and then for people to adopt to that is much faster. So it is important. If you look at blockchain, somebody touched on is about data storage and data extraction. We recently invested in a company, in a fintech company called Ascend. And if you look at today's, we are moving towards more and more open banking market. So just think about what that global banking market means, right? That means blockchain and trust is actually a critical technology platform for people to transact business, even whether you transact business or creating a supply chain of the service or inventory. It is a must technology that if I want to count it that way. So, and then one thing I also want to touch on is if you leverage AI, I think we're there.
And that's a little bit of that conversation we have earlier in the week. Rohan, 1 second, Julian, to you. And Julian, I want to come to you back on privacy in a few minutes, so don't dive too deep in that, but go for it.
Yeah, just two things I want to make. One is about what's happening, another way of putting it, and the other one was to respond to Ken Krushka's comments about the efficiencies. So what's happening, I'm so old that I remember the OS wars with Microsoft and Apple when I was there. And one big thing we all learned, it became obvious, was, you know, it's a battle for the hearts and mind of developers and their creativity driving demand. And we've seen that exaggerated or amplified with the OS, of course, with the iPhone and the App Store. So I would say, if I were to succinctly describe what is happening, this is an OS war, and it will be won by the combination of features that offer the most compelling solutions that mean things to people. But in my opinion, those things are highly unlikely to be built on what we currently see as the public blockchains, which contain the overhead of the consensus mechanisms associated with the cryptocurrency. And it's initiatives like R3 and others at Hyperledger that will bring those efficiencies. Secondly, the second point quickly, to the point about efficiencies. When I looked at this as a mechanism for tokenizing or representing a fiat currency and facilitating global remittances, we calculated we'd need only 5 systems of record as opposed to 23 in the current systems. That is massive, but apart from that, those 5, you need a multi-currency ledger. You need an FX exchange rate in real time. You need your treasury management function. You need your security module, and you've got your single database. And then you create an atomic transaction. Buy rupee, destroy sterling, create rupee, transfer, all done. So the efficiencies for the banks are massive, utilizing the new blocks and tools. But as I say, these are not in. These are going to require very different operational models, governance models. You know, the head of the EU yesterday announced their intention to play a role in setting these rules. So I'll shut up there. I know there's other people with interesting ideas as well I'd like to listen to.
Yeah, absolutely. So Eli, I'm going to come to you. Iris, Ken, Ron, I saw everyone has comments. So I want to start with Eli since he hasn't yet had a chance to jump in, and then I'll come around.
Thank you.
Well.
Thank you, Kyle. I think the most important thing is, and everybody who spoke is correct, most of it, that the adoption really depends on really the business case. At the end of the day, the way we look at it is the fear of the unknown. So a lot of the companies that are quote unquote blockchain companies, they did not really cross the chasm, meaning they were not able to bring their solution to the real world where the actual transactions happen, where the actual commerce happens. We look at a lot of companies. We have a global reach, and I look at all the blockchain and fintech companies coming to us at Bowstead and Sutter. We own 3 broker dealers and 1 in the UK. A lot of the projects that have raised capital are actually running out of capital. They're usually either failing or they really haven't shown the traction, so they're just kind of limping along. And that's kind of sad, because when the businesses look at it, right, they basically don't see the cost benefit analysis that gets them to adopt these solutions. And what happens is, investors are looking at from a lens of use cases and not theoretical use cases. These been around for a few years, right? So they want the actual cases that have played out. They want to see that really, case studies more than use cases. They want to see case studies, and for the most part, they're just not there. And you can put it on the management, on the industry, on the regulators. There's no shortage of excuses. But the reality is that in order at least from our perspective, as investors and investment bankers, we look at solution that has a seamless convergence of the new world and the legacy world, right? There has to be convergence for it to become a viable, acceptable solution. I'll give you an example. Well, before I go there, I think one of the core components that is missing is the compliance and oversight. I think it's the anarchy, or basically the new model that sort of, at least in the initial days, been resisting to the compliance oversight, and then the whole SEC and really the regulatory heavy hand. But that is needed for it to become a trusted source for banks, for healthcare, for any of the industries. I'll give you a very simple example. One of the companies that we brought and we're investing, and it's a public company, so I can't say the name, but really they have created a very seamless platform for the digital asset holders. Doesn't matter what digital assets you have, to be able to go to a merchant using the app and be able to pay for it. And pretty much, on the back end, they have their own exchange, and the merchant never takes any risk or exposure to the underlying volatility or the balance sheet risk. It's seamless, right? So that is a convergence, and it's a public company. So which means they have access to the public market. Now, what has happened also is they would have the ability to go to the companies that got funded, that have the technology, but doesn't really have the adoption to be able to acquire, right? So we, as investment bankers, believe in the new model, as well as, of course, funding and backing, pure tech companies, but really a company that is more of a roll-up play in this market, because these projects haven't really been able to, some of them haven't been able to prove they can be a going concern, so to speak. And for them to really continue, they need to be part of a bigger organization. So there's room for that. And secondly, if you look at the global adoption, one of our other companies is the TransferWise for Southeast Asia, working with the central banks. Yes, there is TransferWise, there is Zoom, but in these countries, they haven't been localized. So this new company, our portfolio company basically brings that convergence in that meshes the central banks in the Southeast Asia with the countries over there. And lastly, investors just don't have that long appetite of years and years for the blockchain digital assets, because they've been hearing about it every year. Like somebody mentioned, every 6 months is a different flavor. So what we are seeing, what we would like to see, is really start off with an actual real life use case, work with a company, and really make that come to life, and then use that case study to expand into a more broader set of customers. And everything else being an immutable ledger or other sort of nuances, they will play out based on the use case. So that's how we think.
Yeah, absolutely. And one thing to mention with that last piece on investors, a lot of what people are seeing today, or what has been seen, is infrastructure. Infrastructure is not a short-term bet. And if you think otherwise, you're kidding yourself, and you should rethink your investment thesis, because at an infrastructure level, this is something that is a long-term bet. You're looking over 5 years in most cases for any of this stuff to even start to show either promise or return. So that's something to also keep in mind. But Ken, Rohan, Iris, I saw all of you guys had further comments on both what Julian and Eli were saying. So Ken, I'll start with you, Rohan, and then Iris. Ken, we can't hear you, buddy. No, we can't. So
you hear me?
Loud and clear.
All righty. Yay. Technology at its best. So, so much good stuff that, has come up in here. I do want to kind of, push back a little bit on, blockchain in the remittance world. I spent 15 years getting all kinds of bumps and bruises in remittances. And, going to your point, Kyle, right, the idea of, blockchain is an infrastructure play, right? The infrastructure of moving money from one place to the other is not the big hurdle in remittances, right? It's not the expense. The expense is all in, cash out, right? How much do you pay to 7-Eleven over here in order to take your $100, and then how much does your recipient in Mexico pay to Electra to pick up that money? That's where 99.9% of the expense is. And just to give you a real world example, right? A company that I ran before Snapcheck was in remittances. We were doing from US to Haiti. All right. So we were doing millions and millions of dollars a day. Every day we would settle between our US account and our Haitian account with one wire for $35. Right. So when you amortize that over, the millions of dollars of transactions, that's a really, really small basis for, the transaction ability. Right. And so it's all about providing the liquidity on the other side and the cash in, cash out. Right. Going account to account is super easy. Citi GTS has solved that over and over and over again. They move over $2 quadrillion a year. They make only in revenue $6 billion, right? Do the math on that. Basis points are really, really small. So I think by trying to focus on that piece of it, we're kind of missing the bigger opportunities, right? That go into things that Eli was saying and some of the others. So I think that there's a lot of promise. Let's just not get caught up in some certain minutia where we have solutions already. And I guess just jumping into some of Eli's questions or comments there on regulation compliance. To me, it's less around regulation compliance. It's more about who do I go to when something is messed up, right? Who do I blame? Who do I go to? Do I call Bank of America? Do I call the Fed? Do I call someone and say, hey, something went wrong, fix it? And it's not me, right? It's Grandma Smith, right? When money runs out of her retirement account,
exactly.
Who does she call? I can guarantee you that Congress is coming down heavy on the entire industry as soon as something like that happens.
Yeah, I saw everyone shaking their head. Sean's pointing at somebody. But Dan, real quick, jump in on this point. Rohan, I'll come to you next.
Well, I just want to give an example of a different type of use case outside of it. We've talked about, you know, the need to find it, and one of my portfolio companies has a use case that you wouldn't necessarily think of as an application for blockchain, but it's become really powerful, and it's in healthcare. It's in the NICU, where preemies go on these devices to get drugs, you know, fed into them to keep them alive. Super high risk, very high need, and from the hospital's perspective, very high liability. If you get it wrong, a baby dies, multi-million-dollar lawsuits, et cetera. So they saw our technology, our portfolio company's technology, and said, wait, so you're telling me that every record of the instructions that were put into this machine that delivers drugs into preemies is going to be recorded and cryptographically signed, and they never go away? And then they said, wow, I could present that in court to say, this is the dosing instructions we gave, and this is what happened. And no one can say that they were manipulated after the fact, because that you know, it's a blockchain. It builds on itself every time, and you can go back and interrogate it and see what it was. And so it's a use of blockchain technology and centralized data, has nothing to do with distributed data, but it uses the transparency of basically database rights. I mean, that's the only way to think about it, right? And so we go back and describe it as a database today. You know, there's read and write. To current databases, when you do a write, you overwrite something, right? And it goes away forever. And a blockchain-based database, or think about it as blockchain-based data storage, the concept of a write doesn't erase anything. And so it just keeps stacking on each other, and they're always there to go back and see. Now, it has resource issues, but if you do it in a private permissioned chain, those resource issues are totally manageable. You put it on AWS or Hyperledger or wherever that keeps the cost down low enough. And it's a fundamentally different type of data management system that could have lots of uses. As example, in NICU, it's Wake Forest Health, one of the leading healthcare entities in the country, has decided to use this and wants to expand beyond this particular case. So I just thought that was valuable to talk about the use of blockchain outside of asset ownership ledgers.
Yeah, absolutely. I see Mark shaking his head as well, along with Ken and Iris. So we'll come back to each of you. But Rohan, I've held you back. I apologize. I know you had a comment earlier. I wanted to come back to it.
Yeah, I kind of want to just pull back a little bit more. So, our focus is on enterprises and governments, and I've been working with enterprises and I've had startups, a lot of Fortune 500 companies for 30 plus years now. And what's really going on, if we pull back a little bit, what we're seeing are phrases like Industry 4.0, Banking 4.0, and what's really happening, that's really never happened before, is really a convergence of a lot of really major technology breakthroughs, right? So blockchain is just one of them, and blockchain brings trust to the game. But when you start thinking about other components, like things that Iris mentioned, like AI and ML, when you think about things like self-sovereign identity, zero knowledge proof, all those things also ties into digital wallets for verifiable credentials, stuff that was published recently by the W3C group as well. And then you add in stuff like hardware changes, like quantum computing, nano neuromorphic computing, and then you kind of throw in 5G that really just open up the pipes. What you really have is a whole new world that we're really just starting to explore, and we don't know what it's going to look like as yet. But we are already seeing that impact in supply chain across all the different various industries. We're seeing stuff with identity, and zero knowledge proof is clearly one piece of that. We're seeing verifiable credentials. We're seeing like a major impact industry. So one of the things that people are being a little bit confused about is really how does all of this come into play? And when you look at the enterprise, this is what enterprise CIOs are all trying to figure out, is where does that investment really go and what's going to be the impact of that? And you have to kind of look at the big picture to see how all of these things are kind of converging and coming together. And then once you see that, you can start saying, how can they help me to solve the specific problems that I'm having? And so blockchain just happens to be the centerpiece of that, because without trust and also without identity, without these things solved, which they are solved right now, you're not really able to do the other pieces of it. So if you look at a macro point of view and then you kind of drill down to the micro point of view, it kind of gives you a bigger clarity on how all these pieces will come together in the next few years.
You just jumped ahead of my my next question. So Danny, Iris, do you guys have anything else to add, or Sean to that as well? Or Mark, I apologize. I saw you might have raised your hand as well. Go ahead, Iris.
I would just add a little opinion here, because I know that everybody look at blockchain as the core technology, if you will. So I look at that as the traffic flow, right? You have the freeway that's equivalent to the blockchain, and then you also have the side street in order to turn off exit to get to your endpoint. So like blockchain is important, but all the additional build that attach to blockchain is equally important to have a vertical integrated operations in order to serve all the constituents that attach to the blockchain. So from our investment thesis, we don't look at just a blockchain technology. We still look at a business viability. And if they use the blockchain technology to create the infrastructure and get to the point that is more competitive, more efficient, and can knock out their competitor, those are the businesses that we will look at and invest.
Absolutely. And Adrian, super quick points on that if you have it. Bless you, Mark.
So I have here three things. This is a card
super
from
quick.
Very quick. This is a card from a regular bank. This is a card from a fintech, and this is a hardware wallet. If a hacker steals some funds from these ones, I can speak with somebody, and in most cases, I can recover the funds. But if somebody steals funds from this one, or if I download the wallet, and it was a case last week, a podcaster who lost 100 something $1,000 in Bitcoin just like that in 2 seconds, downloading a fake wallet. Where do I complain? He received only, okay, I'm sorry, but you can't recover the funds. And this is still a huge problem. After so many years in blockchain, so many discussions, so many projects, you can recover funds.
It's a tough issue, and Sean, Daniel, Mark. Yeah, and Sean, Daniel, Mark, I want to come to you, or Danny, real quick. Where are you seeing opportunities to invest in this space? And Mark, I want to start with you. You're focused at the enterprise. As an investor, where are you looking at investing, or where are potential investment opportunities in both fintech and or blockchain as well?
Sure, happy. I think from an enterprise perspective, I think before there was blockchain, there were databases. So databases make a lot of sense to optimize business interactions, and they're working perfectly fine if you're working within a trusted environment. When you have, I think Iris mentioned that vertical integration, you have supply chains, you have complex financial transactions, you have many parties that not necessarily trust each other, trust their infrastructure, trust the people of the other organization. That's where blockchain implementations for collaboration add tremendous value for the participating organizations. So those are the things we're looking at. Then, of course, in enterprise, what you need to make sure is you have the right management tools. So things like Block Apps or other companies that are building middleware tools that are allowing enterprises to leverage both private, but mostly public blockchain technologies. That's where we're definitely looking at. And Then I think just by being in this space so early, we're benefiting a lot from the global network of being able to check on the teams and the people relatively quickly. And that has been proven quite helpful, especially in the 2017-18 ICO craziness. I think there was so much scamming going on, and being able to, with a couple of Telegram notes, figuring out who is who makes a huge difference to figuring out where does it make sense to actually look into the technology, the claims, and the broader strategy a little bit deeper. So that has helped us a lot of not lose too much money, but really backing the projects and the teams that are making a huge difference. And I think it's all about collaboration in the decentralized world as well. So the more we share, the more we work together, the better it has been for us, and the better it has been for the ecosystem as well, or the other way around.
Absolutely. Danny, to you, what are you seeing as opportunities in the fintech space? I mean, we talked a little bit about security and insurtech, but bigger picture, or maybe more targeted on your thesis, where are you guys seeing opportunities of investment or development in these two areas?
So I'm going to have to agree with what was said, right? Like Mark, Dan, and Eli touched upon the point of use cases, right? I think like the thesis has to be turned around its head. I think that a few years ago, when a startup would come and mention blockchain, people would see it as a blockchain startup, and then like that was one of the keyword, the buzzword for investors to get attention towards this startup. Funds that are blockchain-based funds are emerging. I think that eventually things are going to flatten out, and because we don't see database or cloud funds, right? It's very rare for us to see things like this, and so I think that there will be good companies that are going to come in and say, okay, we can do this better than anybody, which is usually what a startup wants to say as a first sentence to an investor. And then when we're going to drill a bit better, we're going to find out that it's actually based on blockchain infrastructure, right? So I think that we are now moving to this, and that's where we're going to see real opportunities. And so, yeah, I think in the cybersecurity space, there's going to be some interesting things. I think that Adrian mentioned something that's very important, right, with regards to security within the blockchain, specifically in the wallet space. But I think that there's going to be companies that are going to come and say, first of all, target the blockchain space and say, guys, like you're all building an awesome product, but there is a lack of security, like the one that Adrian just mentioned. And we come in and we add this block, this layer of the security to this that you're trying to achieve as the use case with the blockchain architecture. So yeah, we're looking forward to seeing that. Honestly, I have seen very little of it so far, but I'm all ears. So if you have startups that are developing these kinds of technologies, happy to talk to them.
Well, again, you've got a great look. Mark is waving you in. He's giving you the signals to come talk.
Good startups, send them our way. Absolutely. We're always looking.
There you go. Audience, you've heard it here first. If you've got something exciting in these areas, you've got at least 2, if not 10 of us ready to talk. So get ready. Sean, I got 2-part question for you. One, similar to Mark and Danny, what are the opportunities you're seeing? You're going on just closing this fund. You're looking to start deploying. What are you seeing as opportunities in these spaces?
If we are taking it to, well, let me take it back, because I think the major focus that we were talking about in the beginning was fintech and blockchain. So with that being said, I really, really hate to paint Africa in a negative light, especially because a big part of what we are doing is changing the narrative surrounding business, investment, and technology. But in many ways, the negative is what highlights the upside in the investment opportunities. So I'll kind of dive in. So even when we start talking about fintech from the African perspective, in a lot of cases, you're not even talking about fintech in particular. You're more so talking about remittance, how to send money back and forth. So a lot of times we are not accessing technology, let's say like a TurboTax that's dealing with multiple different companies and actually building the infrastructure around what it takes to send money to different places. So with that being said, there are great opportunities in that fintech space to actually start building down the infrastructure that will allow us to more easily plug into different financial markets. And then if you look at blockchain, again, it's really weird. It's really weird because given the position that a lot of these different African countries are in, we in particular are very active in Nigeria, Ghana, Rwanda, South Africa, and Kenya. But one of the biggest things we said is that some of the best use cases for blockchain would actually exist within the continent. And what some of the biggest opportunities are basically that establishment of trust. If you look at it now, like you can barely send money in and out of the continent in a way that is convenient. It took me 3 months to send $85,000 for our foundation into the country because every time we tried to send it, no, or you can't send it here, or new laws passed that don't allow us to send money into the continent because of there's a reputation for scamming and different things like that. So these are the places where blockchain could come in, different financial technologies could come in. And from what I'm seeing on our side is that, again, there's a major need for the infrastructure. In the past, we know that the continent often skips steps when it comes to technology. So I know we had, just again, I'm going to date myself, but we went from AIM to like MySpace to all these different things. And then we end up with like your Facebooks and your whatever. But in Nigeria, in many ways, we skipped from AIM, we touched MySpace, and then we kind of jumped in. We didn't touch on a lot of those different iterations of social media, if I'm using that as an example. And from what I'm seeing now, from a government perspective, from a policy perspective, from a tech ecosystem perspective, I find a lot of people here taking a wait and see approach to see, is this going to be the technology that we take a hold of, or is this going to be something that we skip over and take what's going to be the next big thing? So that's basically kind of how I'm seeing it here. But now when it comes to investment, when it comes to blockchain, what we're looking at are companies that are looking at logistics, outside of the normal ones, of course, which is more so the property area and then the cryptocurrencies. But we're looking very heavily into, again, logistics, identity authentication, because again, there are a lot of people here that, again, it's difficult to say this person is who they say they are. So now how do you connect people who are unbanked, unidentified into the global markets and to be able to transact and do different things like that? So there are bigger problems here, but what we start to see is that taking the buyer habits, the brand loyalty that we have taken through data here, what it says is that whoever solves this problem basically owns the infrastructure for the next 10 to 15 years, unchallenged. So those are some of the spaces that we're looking at. And even if we're looking at fintech, again, we're looking at those people who are building actual fintech infrastructure, the things that are operating in the background.
Yeah, so Sean, real quick interjection, because we're running close on time. So one quick question I have specifically for you. So you're building this bridge between Africa and the US, and we're talking a lot about fintech and blockchain. If I'm a founder or I'm an investor looking to come to Africa to start building, any quick advice you would give me, maybe 1 or 2 points, quick advice that you would give me to coming to build my fintech startup in Africa? Where to go, what to do, what not to do, just a couple pieces of quick advice.
Very quickly, I would say, come to us. And it's not as a shameless plug for our company, but technically our company was built around basically coming here and doing a lot of the diligence. We are working with the companies from graduation sometimes until they start up. So it's not like you're coming in and dealing with companies that nobody knows. Again, we are able to track who the people are, what they've been doing, what their growth potential are, and different things like that. But again, we are more so interested in the general population, the whole investment space. So we work with a lot of different local investors here. We work with Y Combinator. We work with a lot of different companies. And again, they're using us as a test ground to see what works here. But again,
any particular spot to start? Where, I mean, any particular country to come from? I just one quick point.
Okay. Sorry about that. I would say Nigeria, given the size, is a great place to start. If you have something that's proven, that has traction, that speaks to the bottom of the pyramid. Ghana is, again, the 5 countries we started in. It would be Ghana, Rwanda, South Africa, Kenya, and Nigeria. Those would be 5 key places to start that technically have the infrastructure that understands or that would be amenable to what you're trying to launch.
Perfect. Thank you. Dan, Iris, final question before we get to closing thoughts. Which is going to be big with everyone I know. And Julian, I do have a side question for you, which will come up. Dan and Iris, you're both investing in this space in different respects. How has diligence changed, or how are you diligencing, or how should our audience be thinking about diligence when it comes to blockchain and fintech? And don't tell me it's the same, because it's not, as every other company. We know that. So Dan, I want to start with you. Iris, I want to finish with you, and then we'll go through. So Dan, how are you looking at things from a diligence perspective in these spaces?
Are you referring to being that we're in the pandemic, or other than
both? As yeah, pandemic and outside of the pandemic.
Yeah.
Both.
So, with the pandemic, I think it's a lot of it's much less just direct connection ability, right? So you end up being more analytical, less emotional connection, I guess, on with the founders. You dive more into a lot of kind of what's being said about their products, how's it being used, and things like that than you might otherwise, because you need other data points that you can't get by being in person with them. I think that there's still some fundamental things when you do diligence. It's like, what problem are you solving, and and how is it being solved different than other solutions? And so I don't know if it's really changed. You're trying to break apart. These things are all big giant equations, and when you solve an equation, you have to break it into component parts and solve each variable. So you're still breaking it apart and trying to understand each one, and it ultimately comes down to long-term sustainable. Is it solving a big enough problem, right? And then long-term sustainable differentiation. And it's hard to do in crypto, frankly. That's why we haven't invested in that. And in enterprise usage of blockchain, it's easier for our type of diligence to, for us to get conviction around it, because there you are looking at problems to be solved. How big are they? What are the substitutes? What's sustainably different about them?
Thank you. Iris, Mighty Capital, I know you're investing in the space heavily. So how are you looking at companies on the blockchain space from a diligence perspective right now?
Well, I think there really not much difference in terms of how we look at a business to invest, like we do due diligence in all the other companies or industry verticals. But the key really is this business using blockchain as an infrastructure platform? Do they provide them the advantage, right? Because do you really need to have that infrastructure in order to compete? You see, at the end of the day, you invest in a company, either you help the business drive revenues or cut costs. Those are the two main purposes. Do they still meet those two objectives, that why they're in the business or solving a specific problems? Aside from all the 4 principles that we look at.
Wonderful, wonderful. All right, everybody, we are now at that time. I have taken us way longer because you all have too much good stuff to say. So here's the deal. This is time for closing thoughts. I want quick closing thoughts, and then where can everyone find you online? And there will probably be around 2 and 3 of this panel based on how long we went today. So Rohan, starting with you, quick closing thoughts, and where can everyone find you online, including your company?
Yeah, this is just an amazing subject. I am clearly in love with blockchain and emerging technologies, and I think that this is the future, and I hope everyone will spend some time looking into it. The best place to find me is on LinkedIn. Just search for Rohan Hall. My company is Vottun, VOTTUN.com. So those will be the 2 places to find me.
Wonderful, thank you. Mark, same to you. Closing thoughts, and where can everyone find you?
Yeah, amazing panel. Thanks for pulling this together. It's an exciting space, and I think glad to participate in continuous conversations here. I think for all of us, we are in the right space. It's going to change the world. It's not going to happen in 6 months, but I think if we look back 10 years from now, we will see a lot of these things playing out. The best way to find me is on Twitter @Mark M, as in Mary, Eberstein. At Twitter, and then we go from there. I mean, we have all Codex 3 is online, Swan, Alliance of Angels. You can find my webpage, müllereberstein.com as well. So there's a contact form there. lots of ways to get in touch with me.
Easy. If you can't get in touch with Mark, you're doing it wrong. All right, Danny, we're at closing thoughts, and where can everyone find you?
Cool. Thanks for having me. I think it was very interesting to hear this from everybody's perspective, from the investing side, the entrepreneur side. So really happy to have participated here, and look forward to following all of you guys' projects here and there. Where to find me? First of all, by email, daniel@meron.co, .com. That's where you're going to find me. Actually, we wrote this week a Medium post about the bull case for cold emailing VCs. Feel free, as long as what you're emailing for has relevancy with Meron Capital. We'll be happy to talk. LinkedIn, of course, and Rodity. Twitter, you can find me there. I'm not very active. I'm more there for Twitter fights. And if you're looking for interesting blockchain projects, go on Qedit, QED-IT.com. This is the company we invested in. They're fantastic key opinion leaders in the space of zero knowledge proof. And I'm sure you're going to find some interesting stuff there as well.
Awesome. And can you share that article with me to the audience? I've had a few other articles shared by our panelists today that I will drop afterwards. So do stay tuned for that. Danny, if you could send that, thank you. Eli, super quick closing thoughts, and where can everyone find you?
Yeah, no, I appreciate that. Thank you. So one of the quick thoughts that I was mentioning to you privately was, I think the private banking for the digital assets owner is a very, very untapped opportunity. Somebody just mentioned that, you still really have no place to call and retrieve your assets. I mean, that shouldn't be the worry you should have before getting into digital assets. So we believe the private banking model is completely wide open for digital assets. And secondly, the public markets. I mean, if you look at the therapeutics companies, pharma companies, right, they are publicly traded with no revenues. And I think really strong, promising blockchain technology companies should really tap into the public markets, talk to us. We can work with companies that are really strong from a technology perspective, pre-revenue. And I mean, of course, they have revenues. That is great. But please reach out. My LinkedIn is Eli Jawad Ansari, and Bousted 1828 is our website. Just my email is eli@bousted1828.com. Looking forward to hearing from everybody. Thank you.
Wonderful, Ken.
Yeah, I want to take one step back and just remind everyone that we are sitting now in the golden age of fintech. Right, the likes of change that we're seeing from infrastructure to consumer to enterprise, we haven't seen since the Electronic Funds Transfer Act in the 70s. Right, so there is a wealth of opportunity, and the change that people are embracing is fantastic. To reach me, I'm at ken@snapcheck.co, or you can find me on LinkedIn, and happy to continue the discussion on this revolution that is happening.
Wonderful, Adrian. Closing thoughts, where can I find you?
My closing thoughts are, let's look everybody at the business basics, because this one will be the most important. And the huge opportunity in fintech is not to present an improved opportunity when launching something, but to create a new category, to create something new and dominate that category. So I'm looking into that and advise everybody to look at that. So not just improving, I have a metal card here, a metal card there, copycats, just create a new category and dominate that category. And I'm very active on LinkedIn. And also, if you Google my name, Edu Niculescu, there are some other people with this name, but I'm one of them. in the results there in the first pages.
And a great conversation about patents in the space on Wednesday as well. You can find on VCTV. Dan, to you, closing thoughts, and where can everyone find you?
Yeah, I think that, as I alluded to before, I think blockchain technology is a foundationally different way of managing data. It's something that just, databases were developed, relational databases were developed 40 years ago, hierarchical even before then. And there hasn't been that much change. This is a very different way of data management, and it's going to have lots and lots of implications across the global software industry. You can find me at 4490 Ventures, 4490ventures.com. On LinkedIn, you can find me off of that site. LinkedIn, it's you can Google Dan Malven, Malven. I'm the only one out there that I know of that I've come across, so it shouldn't be hard. Always open to, and I'm just DM at 4490ventures.com. So thank you.
Wonderful. Sean, you're on mute, buddy.
Yes. I'd just like to say that, again, just to reiterate that whoever is able to find the technology basically that's going to plug into the infrastructure and allow us to easily send cash and participate in the global economies, they have tapped into a gold mine. Ingressive is throwing about 10 to 20 million at that to prove our case. You can find me, I've added my LinkedIn, so Sean Burrows on LinkedIn, Ingressive, spelled I-N, gressive.co, just like my friend here, is a way to find out more about our umbrella of companies. Thank you, it was a pleasure to be here.
Thank you. Iris.
Thanks, Kyle. I predict that blockchain is actually an enabler, allowing the from the start point to the end point, meaning that you get paid or you pay people. So I predict that blockchain technology will become more and more prevalent beyond 2020. So we, Mighty Capital, invest in the after proof of concept stage, typically in the A and B round. My contact is very simple, iris@mighty.capital. And then you can also find me on LinkedIn.
Wonderful. And thank you, Iris. And last but not least, Julian, two questions before your closing thoughts. How would you explain a zero knowledge proof in 60 seconds?
The ability for someone to rely on something from a third party without knowing the original value. The building blocks have already been mentioned. To me, the building blocks of cryptocurrency, of which the blockchain is one, do one big thing. They enable trust between parties over an open network, parties who didn't necessarily know each other. Cryptography is a huge part of that. The W3C has ratified the verifiable credential standard. That's now being adopted across the world. Recently, a group of huge organizations, IBM amongst them and others, have formed the thing called the Trust over IP Network, which is going to start to answer some of these questions of governance. And that's what we're doing at EcoSpend. We're applying zero knowledge proof-based self-sovereign identity principles to bank feeds, bank data. We're going to allow people to assert and prove things which could be evidenced from a bank statement. We're very excited. I'm grateful to you for inviting us to this awesome panel, and I look forward to participating again in the future. Julian Wilson, LinkedIn, EcoSpend.
Wonderful, thank you. And if anything, I'm grateful for all of you and the extended time you stayed today. Thank you guys so much. This was a well-packed panel of insights from around the world. To your audience, thank you so much for tuning in. Again, all of us are available online. Interested to hear from you. If you're a great company building something in the space, you've got 10 check marks that want to talk to you. If you're an investor in this space, I hope you took something away. If you didn't, feel free to reach out and clarify anything. I have a ton of articles and tidbits that have been shared with me throughout the show. I will dump those in afterwards to our entire audience. And again, thank you for joining us on VCTV. Thank you as well to Elena and to the entire LA Token team for bringing us together. You heard it here first. A lot is happening in the space. A lot is moving. There is more opportunity, not just today, but to come than you can ever imagine, as Ken and others have put out there today. We look forward to seeing you here soon. I'll see you back here on VCTV Monday morning Pacific.